Japanese stocks still a buy after rising 170% since the pandemic, surpassing the roaring 1980s level. The reason why the Japanese stocks have become some of the best performing equities in Asia is largely due to a fallen yen. A depreciation of around 60% against the US dollars, a weaker yen boosts Japan's major exporters like Toyota, Sony, and Panasonic as their overseas earning convert into a higher yen profits. But what's the downside? Inflation. Yes, the Japanese wanted inflation below 2% year on year. That will be ideal, but not at this growth rate of 3.5%. My name is Kon Hao. My work in this channel is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. Another key reason for stock rally starting in 2020 was that just like the US, the Bank of Japan unleashed massive monetary stimulus, flooding the market with liquidity during pandemic. Although the yen has fallen sharply, it seems to me it has stalled since the beginning of 2024. And that's what we're seeing here. That was when the BOJ started rising interest rate from minus 0.1% at the beginning of 2024 to current plus 0.5%. And with inflation continuing to rise, the BOJ will likely maintain this hawkish stand on interest rate. And this could cause the yen to strengthen or push this dollar yen to be lower. And I'm also observing a potential head and shoulder formation. And this is what I'm seeing here. This is the head. This is the other shoulder. And if the support couldn't hold, it may break below. And this means that the yen will be strengthening or the dollar yen coming off. And if the yen strengthen, this may cause the Japanese stock to meet some roadblocks. And in this chart, we can see that its performance since the post-World War II to its roaring 80s, to its collapse, and now it rebounded. And even though the prices have breached the 80s level in 2023, it could represent a false breakout as we could see that the price continued to fall back below that historical resistance the last 2 years. And my assessment for the Japanese stock market is this. They are still testing their 80s high. And this level, it is still a major psychological level. And with money printing, the yen weakens. And a weakened currency fuel inflation. And with inflation, yields and interest rate rise. It means that the borrowing costs are increasing across the different tenure, as we can see here, and that's not the good news for the Japanese stock. The 30 years yield is now at around 3%, a level surpassing the deflationary years. That is something that most Japanese would not have imagined just a few years ago. And with a rising interest rate and a stronger yen, let's see how that will impact the Nikkei 225. And since the BOJ began rising interest rate at the beginning of 2024, the market literally stalled within this 10,000 point range. 2024, and let's see, beginning of 2024, we see that the market literally are performing a range right now. And there is a key support level at 30,000. And let me just draw a horizontal line across. We could see here in the past, it was resisted at 30,000 around there. And finally broke above, it became the support. And we can see that it is supporting right now. So we can see that it was a resistance in the past, but currently the BOJ is trying their best in managing the yen and inflation very carefully to maintain the financial system stability. And based on this sentiment, I believe that the market will continue to move within this range, a wide range, although it may gradually narrow over time. And I'm seeing something like this. It may gradually narrow over time. You could see some support and resistance there. And make sure to keep monitoring the direction of the Japanese yen, yield, and inflation. These are the three things I will continue to monitor in the weeks and months ahead. And if the yen strengthens too quickly or the yields and inflation rise too sharply, it could push the market to break below this range. And let's see, which I believe that market will continue range bound and that it may break below. And if it is all well, the market will likely continue to break on this upward momentum. And let's look at this upward momentum. And maybe I'd like to change the color if it's all well. And I hope that everything will be well. Another key factors that I'm watching closely is tariffs. The direction of the Japanese stock market will also be influenced by the tariffs agreements ultimately with US, and as well as how quickly they are forging potential partnership with the rest of the airlines. Just like many other nations, they are racing against time. I would like to hear your thoughts on this. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to my channel. Join us in our weekly case study and discussion. Click on my profile icon or description below to find out more. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stay through this tutorial. You have many great training weeks ahead.